Hey guys, Boris from BKT. Another pretty decent week of trading, although not our best, I would say, because we had one mediocre trade and one good one. So let's start with the first trade that we did this week, which was the Euro-Pound trade, which I would consider to be very mediocre, but still worked out our way, mainly because I think we managed our risk a little bit better. But here's what happened. Basically, Tuesday night we were bearish UK CPI, excuse me. But there was a tremendous amount of cross-flow information. The night before, UK PPI printed very, very hot. Yet we had all this data that suggested that maybe inflation in UK just did not go through to the consumer level. Basically, that even though producer prices were very high, they didn't pass those prices on to the consumers, and therefore there was a potential downward surprise in the UK numbers. So we thought, okay, maybe it's worth a shot to take a short on the pound. Although it was a level 2 confidence trade, and that was one of the big problems with the trade. We didn't have high confidence because of all this cross-flow information. Secondly, we compounded the problem by getting a little too cute. We decided to express this trade by being long Euro-Pound instead of just simply shorting pounds. So we get long Euro-Pound like right around here, and the trade does move our way. I make T1 like right around here, go to break even. Fortunately, we go to break even because the data actually turned out to be against us. It turned out to be a little hotter because the PPI did have a big impact. The thing drops through, then of course actually rallies all the way back up and actually comes back up later on. But we made 24 points on this trade sort of very much the hard way. The real intelligent trade in this particular situation would have been the pound. If you look at the pound, we could have gotten in at prices right over here. Remember, our view was just basically negative pound. We just got a little too cute by trying to get long Euro-Pound. Here, had we gotten short pound, the trade would have worked before the event risk. We would have made close to, let's say we got short around 95.40. It had gone down all the way down to 94.90 way before event risk even happened. And by doing that, we could have protected our trade by basically trailing it to the stop side. We would have probably been stopped out way before event risk even happened and collected 70, 80 points in the pound. So overall, that was the reason why it wasn't such a great trade. We didn't choose the right currency pair. We didn't have level 1 confidence on the fundamentals. We sort of forced the trade a little bit, but we still walked away with money. The second trade was much, much better. This was the Kiwi Yen trade. And let me just pull it up to tell you where it is. Hold on. Here we go, here we go, here we go. This is right here. Right here is where the event risk trigger happens. Here's the story with the Kiwi dollar. Going into Thursday night, we were bearish New Zealand retail sales, and we had very strong level 1 confidence on it. Now, there were two ways to express that trade. We could have shorted Kiwi dollar, but Kiwi dollar was grossly oversold. It was basically what we call walking the band. It was at the second standard deviation to the downside. It was so oversold that we didn't think there was going to be much juice left in shorting the Kiwi dollar. On the other hand, the Kiwi Yen trade, let me just pull this up on the dailies. You see this on the dailies? We were right here. The Kiwi Yen was on the upper end of the sell channel. This is a perfect, we love to short at this level because it's basically good value within very much a sell zone. This is our classic setup. So we got short Kiwi Yen at this point, and it pretty much was a picture perfect trade. We get short around 3:30 before the event risk. Event risk comes out, we make T1 right away off event risk, and then I simply hold, and we trail the trade all the way down, and make about as much money as possible. I made about 90 points out of the trade before it finally stabilized and then bounced back. So the key thing here was that the Kiwi Yen was a level 1 trade with a very good technical formation. It was a proper trade to make, and that's how we wound up making 2 winners for the week. Next week, I'm going to be in Korea, so we're going to be trading from opposite sides of the globe, but we have a couple of very interesting setups hopefully setting up. So I very much look forward to everybody joining us at BKT. For those of you who are new, please join us at BKtraderFX.com. We'd love to have you aboard and show you exactly how we trade the currency market. This is Boris for BKT, wishing you the best of trading next week. Talk to you soon.